let's go over some tips and hints for the payroll project. So the company that we're going to be doing the payroll project for is Business Bookkeeping Solutions, and they are brand new. So we're going to be recording the company's very first payroll. Therefore, cumulative earnings prior to this first payroll are 0. All employees for this company are paid semi-monthly, even if their pay is quoted as $50,000 per year. If you forgot how often semi-monthly is, look in your chapter materials or just Google it. All of the employees of this company are eligible for overtime pay. Now, this is unusual. This is a really nice company. They're going to give overtime pay even to the salaried people. So that means we're going to have to calculate the salary people's, or we're going to have to convert the salaried people, like $50,000 per year. We're going to have to convert that into an hourly rate so we can figure out what their overtime rate is. So number 5, hourly rates must be calculated in the payroll register for each employee, even if they are not normally paid hourly. Because why? Because everyone is eligible for overtime. And number 6, how to calculate the hourly rate for employees with a yearly or monthly pay amount. So the first step is convert their pay to an annual figure if it is not already an annual figure. For example, if someone gets paid $4,000 a month, you have to convert that to an annual figure. So $4,000 a month is the same as $48,000 per year. Step 2, you're going to divide that number, $48,000 a year, by the number of working hours in a year to get the employee's hourly rate. So here's a hint. How many working hours are in a week? Well, 40. And how many weeks are there in a year? 52. So how many hours are in a year in a normal working hour? What's 40 hours a week times 52 weeks? So for example, if this person is getting paid $48,000 a year, we're going to take $48,000 a year divided by 2,080 hours in a year, and that gives us an hourly rate of $23.08 per hour for this person who is paid $4,000 per month. Okay. Number 7, how to calculate regular pay found on the payroll register. Remember, regular pay is gross pay before overtime pay. So if an employee has a yearly amount, say $50,000 per year, we need to divide the yearly amount by the number of pay periods in a year. So how many pay periods are in a year if the employees are paid semi-monthly? Well, it means there's 24 pay periods. So what we're going to do to find a salaried person's regular pay per pay period, you take their annual rate. So here's an example. We got $50,000 annual rate for someone. Divide it by 24 pay periods in a year. And that means that person for their regular pay gets $2,083.33 per pay period. Okay, that's what you do if an employee has a yearly amount. Well, what if the employee has a monthly amount? Well, you have to convert the monthly amount to a yearly amount first, just like we did up here. So the person that gets paid $4,000 a month, convert that to a yearly rate. So that's 12 months times 4,000 gives us $48,000 a year. And then to figure out the $48,000 regular pay per pay period, you would divide by the 24 pay periods. Okay, G, 401k contributions. So employees of this company can elect to contribute to a 401k plan if they want. 401k plan is a type of retirement account. One of the advantages is that the contributions to the 401k are not taxed for FIT or SIT. They are taxable for all the other taxes. So what that means for this project is if an employee has a 401k contribution, when using the FIT table, instead of using the gross pay, you have to use the gross pay minus whatever they contributed to the 401k for that pay period. When calculating the SIT, base the tax on the gross earnings minus the 401k contribution. So let's do an example. Let's say an employee is paid $50,000 a year, but contributes $1,000 per year to her 401k plan. So here's what's taxable. For FIT, now remember, the 401k contribution is not taxable for FIT or SIT. It's taxable for everything else. So this person who had $50,000, makes $50,000 a year, contributes $1,000 a year to the 401k. For FIT, only $49,000 is taxable. For SIT, same thing, only $49,000 is taxable. But for AUSTI and for Medicare, everything is taxable. Now, if you look at your ledger that I handed out to you, there's an item column. And you might recall from earlier accounting classes that the item column is only used for entering the word adjusting or the word closing. So you enter adjusting if this transaction was an adjusting entry. You would enter closing if this, whatever this transaction was a closing entry. Now this project does not have adjusting or closing entry, so leave this column blank. Writing in this column will result in a deduction.